Okay, guys, real quick, nice easy trade today. Very basic, so I just want to point it out. It won't take long. So here we are on the pound, which is generally in a range here. A lot of these pairs have been struggling to trend at this point in time. So we have a range, and as I say with ranges, I like to sell high and buy low, particularly on fake breakouts with climactic volume. We also had, and again, looking at the top of this range, there's your fake breakout. But just to draw the fib, first of all, high to low. So we have a 618, 50 to 618 area here. So that's where that fib comes from. Of course, I like to look for those trades in the fib zone. So that happens to be there too. But obviously there's a previous resistance, the high of the week here, which got broken. I think this was news at this time. I wasn't on the computer, but that's how typically news behaves. But this comes in as a sign of weakness, first of all, with the ultra high volume into fresh new ground for the week, closing well off the high and making no progress to the upside. And if you notice quickly what happened after that, as far as the sequence, is a no demand here. So simply from a 1 hour point of view, we have weakness in a fib area, into new high ground over the range, a potential no demand at this point in time here by definition, and then the close below the no demand is really what confirms it. And for some traders moving below, I prefer to wait for the close to really, say 100% confirmed. So at that point in time, the no demand is confirmed, but also the fake breakout is confirmed because this candle closed back into the old range. So that was a big part of the, confirming the setup and helping the probability is a candle closing back within the range, so we can, actually call it a fake breakout because it can just sort of play around and end up closing out. So it closed inside the range. So classic weakness, ultra high volume, pin on top. No demand. Again, I don't look for no demands off the highest price areas. I would rather see increased volume and sustained selling. So we have the weakness, we have the no demand, we have the no demand confirmation, we have the fake breakout confirmation, and just at that point, based on that, without even looking at the smaller time frames, checking that this was weakness on the smaller time frames, and it was, so that all agreed there that that was weakness. But it's very simply the sequence, and particularly at the fib zone, the fake breakout, it's all there, it's high probability stuff. So there's the setup at that point. If you go to the smaller time frames, we'll take a quick look. Right now it's up about 80 pips. It was a nice move. There's the initial high volume there. Again, it's the high price, high volume, as you hear we talk about a lot, to really confirm the weakness. We didn't continue up after that. That would be very different. So that ended up being the high and a nice rejection. We kind of went into slow territory for a little while, but you can see a bit of a sign of weakness here leading to this down move. And really, there's a whole bunch of no demands in there, if you were looking at smaller time frame for no demand after that weakness. But I could see how maybe this would throw you off because it got very quiet and slow for a little while, which the market seems to be doing at particular points throughout the day, sort of going to sleep. Here was New York Open, and again, it tends to sort of slow down. Maybe it was the uncertainty of what's going on with the U.S. at the moment, but anyway, not getting into that. So there was a bunch of no demands. There's one there, and if you just go through, there's another one there. But really, we're talking about, once it comes back into the old range, was a little more high probability. So taking those earlier no demands, were more up here. That's it. As far as targets, something to look out for was this previous resistance could become support. So, multiple targets along the way where you may run into possibly some issues. There's a fib here and 618 and a weekly pivot, an area to watch. But price just really just shot right through these areas and didn't really stop to warn you that, it was going to reverse or anything. So it was a very aggressive move. So yeah, in the end, it's a very simple textbook trade. Like I talk about with the ranges and how to deal with them, the fib, the weakness, the no demand, the fake breakout. It's all there. Simple stuff. Business as usual. So hopefully we keep seeing some nice moves this time of day. Now that the U.S. hopefully is getting some sort of resolve to this situation. But we take it as it comes, right? All right, guys. See ya.